I'm going to show you my favorite strategy that I use to personally grow an account from 2,500 to 10K in just 1 month. So number one, shares. This is the safest way to trade SPY and by far the most viable for longer term trading as well. Don't expect to make a lot of money with SPY shares unless you have a lot of capital. In fact, in a couple of minutes, I'm going to share with you how I trade SPY with very little capital in the most safest way. When you're trading shares, you're not trading with leverage. You're only using your own capital, which means it's the most stable way because you can know exactly how much you're going to be risking on every single trade that you take. Now, number two, this is where we start to push into leverage a little bit. This is also a pretty good way to trade SPY, especially if you don't understand options or futures. Essentially, you have SPXL, which is the 3 times leverage of SPY. You also have the SPXS, which is the 3 times leverage of SPY, but the inverse. So every time SPY goes up, SPXS will go down. You do not, and I repeat, do not want to invest in these long term because they have something called leverage decay, which I'll cover in a later video. Essentially, they lose value over time no matter which way SPY goes, and this is due to leverage decay. But for intraday trading or even swing trading, these two names are a very solid choice to trade. All right, so number three, using SPY futures, this is where things can get a little risky. Because you are using more leverage, so you have to understand the risk before you dive in. Essentially, you can trade ES futures to trade SPY, which moves the exact same way as SPY. It's important to keep in mind if you do trade ES futures, each contract will fluctuate $50 per 1 point the underlying security moves. Essentially, if ES moves 5 points, one futures contract will move $250 and two will move $500. Futures are cool because you can buy to open when price goes up and you can sell to open when price goes down and make money either way. If you have a smaller account, you can also trade MES, which stands for Micro E-mini S&P 500 contracts. This is the same exact thing as trading ES, but everything is 10 times less. Meaning if price moves up 1 point, that's going to be worth a $5 move instead of $50. This is great for small accounts because if you have a $100 account or $200 account, you can easily trade the S&P 500 without having to worry about using more capital than what's in your account. Number four, option buying. This is where things can start to get pretty risky. In fact, you've probably already heard of options, but on SPY, you can play calls to go long and puts to go short. When you play options, the max risk you take is on the premium itself. So if you buy one contract for $300, the most you can lose is $300, and the most you can make is virtually unlimited, which most people are drawn to. However, you need to be careful with options because you have something called the Greeks working against you. I'll break this down fully in another video, but this is the main thing you need to understand. Essentially, there's 4 Greeks: Delta, Gamma, Theta, and Vega. All these Greeks are constantly working against you. So it's important to understand them so that you don't lose unnecessary money or take unnecessary risk. This is one of my favorite ways to trade because the upside is virtually anything you want it to be. Meaning, even if I want to risk $100 on a trade, I could do that and also make 300, 400, 500, and essentially anything else that I want. It is tough to catch those moves, but if you're strategic with how you trade, you can definitely catch them. And number 5, arguably the riskiest of them all if you don't know what you're doing, but also one of the most slept on and simple ways to make money trading, if you understand it, but a few do. So this strategy is called option selling. What you can actually do is short options or sell them instead of buying them. This way, instead of all the Greeks working against you, they're going to be working for you. Now, the downside to selling options is that your upside is limited. What I mean by this is you can only make a capped amount when you enter a short option. The bad news is if you get short an option, there's unlimited risk. So you could essentially lose a lot more than you're willing to put in. Now, there's 2 ways you can combat this risk. The first one is by buying shares to offset that risk. The other way is simply by selling a spread, which means you're buying an option and selling one at the same time. But before we get into that, let me explain why you want to sell options in the first place, even though you're taking on more risk. When you're selling options, you essentially get a break-even price, which makes trading so simple. So if I were to sell a put at $50 at a strike price of $2, that would essentially mean price needs to stay under $48, and I'm going to make the max amount of money possible. Anything above $48 and I'm down to lose anything. It could be a little bit, could be a lot, depending on where price ends up going. This makes trading very simple. You essentially get one break-even price, and as long as price stays below it, whether it's $1 below it or $50 below it, you're going to end up in profit. I'll give a much more in-depth breakdown on option selling in a later video. The S&P 500 is called the S&P 500 for a reason. It's built up of 500 of the best performing stocks in the index. So what does that mean? It means essentially all 500 stocks collectively impact the movement of the S&P 500. There are some stocks that have a much bigger impact on the overall movement of the S&P 500 compared to other stocks. For example, Apple. This is the biggest company inside the S&P 500 index. So if Apple has a large move, there's a high chance you're going to see that similar move in the S&P 500. Now, a smaller stock inside the index is not going to have as large as an impact. But this is a really helpful thing to keep in mind because you can trade other stocks with SPY as confluences. Speaking of confluences, you can use NASDAQ as a confluence as well, because NASDAQ is made up of the top 100 performing companies instead of the top 500. Since they are both compromised of a lot of the same stocks, if there's a big move in SPY, you can bet there's going to be a big move in the NASDAQ as well, or vice versa. This is just another thing to keep an eye on while you're trading SPY. Now, as I mentioned in the beginning, I want to break down how I use SPY to turn $2,500 into $10,000 in just 1 month. Now, my full strategy breakdown is going to be in another video linked down below, but I'm going to give you a brief overview of how I did it. This entire strategy was built on buying options. I didn't do any spreads and I didn't do any shares. I kept it very simple, only buying calls and buying puts. When I funded the account with $2,500, I kept it very simple. I had one strategy, one setup that I used on SPY. It worked extremely well. Simply what I did was I would look for supply and demand zones, trade them using both calls and both puts, and a lot of times I wouldn't even take trades. With SPY, since I'm only trading one stock, I was very focused on only taking the highest quality setups. Now, the thing with SPY is there isn't always going to be an A+ setup every day. So in the beginning, it was a little tough to get the account to grow just because I wasn't taking a lot of setups. But because I kept my risk to reward extremely favorable, I was able to grow my account pretty quickly when those setups started to form. As those setups started to form, I started to increase my size and eventually was able to grow it all the way to $10,000 simply trading SPY options. If you want to learn how to make a full-time income just trading SPY, click the link below and I'll show you how to do it for free. If you enjoyed this video, make sure to subscribe and I'll see you in the next video.